All right, so let's go ahead and get going with Masterclass Part 2. Today we're going to discuss the pattern day trading rule, workarounds for that, also the newest development in FINRA, and hopefully how that makes everyone's life easier. We're going to walk through trading basic call options. If you don't want to trade spreads, how to trade the basic call options. We're going to talk about using XSP versus SPX. If you've been paying attention, you know that in the game plan, I gave you the XSP options, but then on the actual trades, I give you both. We're going to walk through the differences of why you might do one over the other. And then we're going to do a deep dive into the sweet advantage that we have on the options we use. And I think this is really cool. I'm a visual person. I learn better when I see things. I think this will hopefully help you guys, have that aha light bulb moment of why our debit spreads are so awesome. So we'll do that all today. And then guys, keep in mind Friday, we'll have another masterclass and I'll walk through the dashboard. I'll show you how the internals work, how you can install it, and then how that could be helpful for position sizing. We'll also talk about volatility and how we can find days that may have better odds of working out overall. So quick recap, guys. I've got that indicator code that I've shared with you guys that gives us our signal. You all have access to it in the members portal. It works on SPY, XSP, and SPX. It works on the 5-minute chart, so it's not going to show up on any other time frame. And each morning it tracks the high and low price of the S&P 500 in the first 15 minutes of the day. So those are 5-minute candles. We look at the first three to get that high and low price. That's the 15 minutes of the day. So 9:30 to 9:45 a.m. Eastern sets our range. And then we simply wait for the 5-minute candle to close above or below that price to give us our direction for the day. Now, again, I don't love jumping in early. I like to wait until right at the last second to enter. So once the S&P closes above or below the range, in this case it's above, we get that entry buying calls. In this case, we're going long with the call options. This is a bullish trade, trading for a continuation higher. And when it all works out, we have a good chance to hit our profit before lunch rolls around, like we did today. Very similar chart today, just add a little drop in here from that news. But other than that, look just like this. And it works the same way to the downside as well. High and low range marked from that first 15 minutes. When we close below, when that 5-minute candle closes below the lows, we buy puts. And when it works out, we have a good chance to hit our profit target before lunch rolls around yet again. So again, this was all covered in the first masterclass, which I've done twice now. And yes, we will talk about strike selection today. But hopefully the general principle of how this underlying trade works makes sense. Again, a couple of pointers. Let that 15-minute range develop. You don't want to jump in early. Uh, Number two, once it's developed, I send you both the calls and the puts. We do not trade both, but I give you both of them just so you have them on deck ready to fire once we get that entry signal. I want you to have both easily accessible for when we do get confirmation. And then number three, for the confirmation, we like to wait for the 5-minute candle to close before jumping in to avoid false signals. It's funny, there's actually been two occurrences uh, where we got the entry confirmation. I sent it, and then Thinkorswim actually updated the charts about 3 seconds later, and it pulled back. So I do try and get this to you guys as fast and timely as possible, but generally just want to wait and see that candle close above or below before jumping in. So as a reminder, really quick walkthrough of the Telegram. Here's how Telegram works. This is kind of optional, but first thing is, when the market's open, I may do a little analysis, or I may just send early in the morning what news we have that day. Just any nuggets that I see out there that may be helpful for your trade. And then at 9:45 every morning, you get the opening range game plan, which gives you the options criteria of which way we could trade. Again, we're not taking both. It's just here's what it is if we're going bullish, here's what it is if we're going bearish. Now, about 90% of the time, these will be the options. Sometimes they will adjust. If we get a real crazy move, they'll have to adjust. But generally, we'll stick with the options listed. And then, once we get that 5-minute candle to close above or below the line, I will send you an entry signal with the exact options. Again, green means bullish. We're doing calls. Red would mean bearish. We'd be doing puts. And then I'd follow up with my fill prices and profit target details. Again, if you want to set your own profit target, just take whatever your entry is and multiply it by 1.5. That will give you a 50% target. And then I'll send you updates on the price action as the day develops. And it's a lot more fun sending you guys updates when we're hitting right away in the morning like we have been on the last couple of trades. Nothing better than showing some wins. So, next up in this class, let's talk about the tips for getting around the pattern day trading rule. So, if you have less than $25,000 in your account, then you get a maximum of 3 day trades in a week. That's the law. That's what FINRA put into place. It's annoying, but it is what it is, and we can't, we can complain about it, but we still have to adhere to it. So, some workarounds for you. Number one, the easiest workaround, but I think it's super lame, but I'm going to throw it out there anyways. If you want to, you could only take 3 trades per week. You hit your last one and get your day trade and wait for your account to reset. I think that's a terrible workaround. I don't even know why I put it in here because I want you to take them all. Well, I want you to have the ability to take them all, I should say, if you want to. The real workarounds are workaround number one, have 2 brokerage accounts. So have a Thinkorswim account and a Robinhood account. Take the first 3 in your Thinkorswim account and then take the last 2 in the Robinhood account. So you can split up. Oh, so Joseph posted here in the chat, trades 2 on Robinhood. He does 3 on TradeStation. So he gets all 5 trades, but it doesn't mark him as a pattern day trader because he's got 2 different brokerages. In my opinion, that's the easiest and best workaround to have you see the results that we're currently hitting. It's not difficult to set up 2 brokerage accounts. And it's just honestly, in my opinion, the best workaround. It is a little annoying, but if you want to be able to take all the trades and not have to have 25K in your account, it's what you have to do, and it works great. The next, so here we go. Yeah, a lot of people. Sharon says 2 accounts can both be in Schwab. I've heard mixed things on that, but if you can do it both in Schwab, that's awesome. Hope I use Thinkorswim and TradeStation. Perfect. So that's workaround number one, just to have 2 separate accounts. Workaround number 2 here, or number 3, I'm just going to edit this slide. I don't want to have this in the future when I do this. So workaround number 1, workaround number 2. Don't use the auto target. So with the XSP and SPX, if you do not use the profit target and you instead just let it expire at the end of the day, you do not get dinged for a day trade. So like, let's look at today's price action. Our strikes were what, 631, 632. So honestly, if you still have this open, wait, no, our strikes were 632, 633. If you still have this open, if XSP ends the day, I mean, I don't want to get too confusing here, but 632 plus your entry price, above there you make money and you don't get dinged as a day trade. It cash settles, so you don't end up with shares either. And so you can make the profit and you don't pay commissions. There's a lot of benefits to it. So if you, instead of using the target, you can let it expire at the end of the day and you don't get dinged. Let's talk about the pros and cons real quick. The pros, the positives to doing that are, again, you don't pay commissions for selling it. You don't have to worry about being exercised. It's cash closed. You don't get dinged as a day trader. Another pro is that you can make a lot more money. I should say, it could have the potential to. So today, let me make sure I just have our exact numbers. Today we entered for 54 cents. Whoops. Today we entered for 54 cents and exited for 81. So we did 81 divided by 54. We did 100, or a 50% target, right? We made 50% return on investment. However, if you let this expire today and it closes for a max profit, if you've come to the other classes, you'll see how I can do this, but instead of doing 50%, you're going to make 85% return on investment. So you won't get dinged for a day trade and you'll make 85%. Some days it'll be 100%. So the overall profit potential by letting it expire actually increases from the day to day. However, let's talk about the con real quick. The negative to doing this is things can change later in the day. So we hit our target here, we're out with a profit. Well, we don't have to worry about the market selling off in the back half of the day. If you let it expire, you do have to, take that into consideration, that we might take a winner and you end up taking a loser. Now, if you're curious on how this actually looks over the long term, we actually tested this out using the auto target and holding for expiration. And keep in mind, excuse me, auto target, hold for expiration. Obviously, your win rate's going to decrease holding until expiration because we take profits here. We're out. We don't have to worry about something bad happen during the day or at the end. Later part of the day, if you're holding for expiration, your win rate decreases. Still an insane win rate, but it's lower. However, look at the overall profitability. Right about the same. So hope that's another great workaround for you guys. It's not going to be as fun in the sense that there will be days where we win and you don't, but there's also going to be days where I post a 50% gain and you see a 100% gain in your brokerage account. So there's pros and cons to both. Manny says I used that option last week Friday and got dinged $0 for assignment and exercise. I'm not sure what you mean dinged $0 for assignment and exercise. Okay. And Gregory here has workaround number 3. If you want, I do not trade futures, and I don't provide any opinion on the futures market. But you could also trade the E-mini S&P futures, where day trades aren't counted. That's another workaround. Sharon, oh, I see you're chatting with someone here in the chat. I must have missed Mike's message. That's a great question, Mike. Mike has a great point here. Mike says, this is really smart. So basically, like today, it was going in our direction. Could you take off your 50% target and then basically place a trailing stop at a 50% gain, right? So basically, if it goes below that, you would be filled as a trailing stop, which would still be a profit. That could be cool. Okay, Manny, so you're saying you had one that didn't work out. That happens. Um, Mike, that could be really cool. Basically, like a trailing stop, I think is what you're suggesting, not an actual stop loss. That could be fun. If you can figure out how to do that, that could be really cool, honestly. Um, Dean is asking the percent shown in the indicator top left corner is at the range percent of the close of the first 15 minutes. Yeah, that's the high and low of the first 15 minutes, Dean. That's the range size. Yeah, Mike. That's a great idea. Let me know if you get to testing that out. I am interested since we're using spreads here. The bid ask will be a little bit wide. So, like, you may have noticed there are times where it'll be like up 50% and the next second it says up 40%, even though it's really still up 50% and the market didn't move, the options prices move. So, if you can figure out something that works out good, that'd be awesome. All right. Hopefully, this can all be resolved soon with the day trading issue. I forgot about the futures. I don't spend much time talking about futures, but if you want to do the E-mini S&P, you can do that as well. But FINRA is reviewing this rule right now, actually, and looking to make it so you only need $2,000 in your account to worry about the pattern day trading rule, which would just be awesome. So hopefully that can be resolved soon. But next up, let's talk about spreads. What if you don't want to trade the debit spread and only want to trade basic calls and puts? Can you take this strategy? Well, yes, the answer is absolutely you can. There's like with the letting it expire or not, there's pros and cons. We'll talk about them here, but let's first talk about how you can use basic calls if you want to. So if you want to just take the basic options, just take the buy side of the spread I give you and add about 7 days till expiration. So in this example, bullish entry, we're buying calls. You would take the buy side and add 7 days. So in this example, instead of buying the 21st of July 632 call, you would add a week to it, buy 28th of July 632 call. And then you would take your profits when I let you know on the channel profit target's been hit. So then you can get out then, or you can set a profit target, which I will cover here in just a second. Let's look at the puts. Same thing. Take the buy side of the puts and just add 7 days. So here you can see we're doing a bearish entry. Here's the options. By 29th of July, 630 put, let it ride. We've got some questions here in the chat. I'm going to answer them. So, however, optimal results with trading just basic calls came at a 25% target or a time stop of end of day. Basically set a profit target at 25% or end of day target, and that was the best results. I mean, still pretty good results overall. I mean, Cager's 53%. That's insane. but it's not the 50% target each day. It also worked well with a stop loss in place. I don't trade stop losses on the spreads, but with the basic options, the testing showed that stop losses were actually helpful. So 25% profit target, 25% stop loss. With that said, the debit spread dominates, which is why I prefer that. Again, debit spread, lower cost of entry. Debit spread, it limits time decay. Debit spread can pay even when the S&P barely moves. Debit spread at a better win rate. Let's look at the win rate here. 60% win rate versus 86. That's because of time decay. More overall profit. Debit spread made more money over the long haul. So let me answer a couple questions here before moving on. Someone asked, I don't know where it went, but someone asked, why not just use 1 day till expiration on the options? Because the decay is just insane. You will have a couple mornings where it moves big time and you make some really good money, but a lot of times we're getting like a 0.15% move to hit our target. Your call options are just going to be eating up value. Can we still take today's setup? No, Bob, we've already hit the profit target. Can we get exercise waiting for expiration? Not if you use SPX or XSP. There are no exercisable shares, so you don't have to worry about that. If you're using SPY, then yes. Yes, Stacy. Sorry, I've got a lot of questions here. You've been using, okay, Bill says he's been using 0 DTE on basic calls and puts with a profit target of 20%. Bill, has that been working out pretty good for you? Bill says that's been working out good. So if you want to, you can be like Bill. He's using the same expiration that I am, but just using a 20% profit target. That thing is, it's going to move pretty quick. Bill, you might hit your profit target well before we do on a few of those, but it does have to move. Brandon, is that in Robinhood? Dean, yes, you can use credit spreads on the strategy if you wanted to. Really, in Thinkorswim, you're getting exchange fee per contract. Where do you see that at, Brandon? I did see that my friend has Robinhood, and he showed me that in Robinhood. And then do you know how much that is, Brandon? I'll review the trade. All right, let me go look. Here, let me just, here's SPX. Is that what this is here? Oh, there we go. Huh. Looks like there is right there. So a little extra hidden fees there. Um, TOS fees are horrible. I just got them to decrease mine again by like 5 cents a contract, but I would love it. They should go zero commission trades. That'd be awesome. Brandon, yeah, you can definitely factor that into your profits. Everyone's probably gonna have different numbers for commissions and what they're paying there, so I can't do that for everybody on my end. I just give you the entry and exit price of the option. But on your side, yeah, definitely something to calculate in. I doubt exchange fees is negotiable. Yeah, I agree, Brandon. All right, we will keep on rolling here. We got a question here. If I were to take 3 trades with the target and 2 letting it expire, would that be okay for the trading rule? I believe that should be okay. All right, we'll keep on going. Sorry, that was my quick break for questions. Next up, we're going to discuss XSP versus SPX. And actually, uh, and SPY as well. So again, SPY is the main ticker. Everybody knows about the SPY, S&P 500. XSP and SPX are the option only trading version of those. Basically, There's no underlying shares, so you can't go buy and invest in XSP shares. There's only options. So that works for us for a few things. First off, they all have all have zero DTE daily options. They all have very liquid options. The main difference here is SPY, you can get assigned shares. XSP and SPX, you cannot get assigned shares. Also, SPY, when you trade it in under 2 years, you pay capital gains, short-term capital gains tax. XSP and SPX are split 60-40. So you save a little money on those two tickers. So why would we trade SPX versus XSP or vice versa? Well, I give you both of them now. I started just giving you XSP. I don't want to confuse everyone, but now you get both of them. The reason why you may take XSP versus SPX, let's look at it. XSP are going to give you cheaper options. I just mean cheaper per contract because XSP has dollar spreads. We typically enter for around 50 cents a contract. So about $50 per contract to get started. SPX is just 10 times the size of XSP. So the options we're trading for SPX, and there's a little bit to it, but generally speaking, are about 5 times more expensive. So instead of needing $50 a contract, generally speaking, it's about $250. More strikes. SPX actually gives us a little bit more adaptability with the strikes. Long story, and I will try and keep it very short and sweet here, but XSP is $1 strikes. SPX is 10 times the size, so you'd think they would have $10 strikes. Well, they don't. They have $5 strikes, so it just allows us to get a little bit more nimble in our option selection. SPX is better if you want to invest larger stakes. If you want to invest really more than $250, SPX may be the way to go. And then on which one fills faster, well, it just depends. Typically, and I say this, typically my experience has been SPX fills a little bit faster. Today, XSP filled a lot faster than SPX did. But generally, SPX gives us better odds to hit a little bit faster. So SPX is the 10x priced version of XSP. So XSP is $600, SPX is 6,000. So that allows us to trade bigger size and save money on options, contract, and commissions. So to Brandon's point, if you want to save money on contract fees, SPX is going to be your friend. So again, it's about 10 times the size. So for general purposes and examples here, if we're trading the 630 and 631 call spread for about 50 cents entry, the SPX, same trade would be 6,300, 6,310. See, I just add a zero here. And instead of being 50 cents, it's $5. Does everyone see what happened there? It's just 10 times the size. The numbers move one digit. So it allows you to trade larger positions for cheaper. So how to pick the strikes, the basic way. So how would, I did this training before I started giving it to you guys, but I want you to learn it either way. If but depending on what that pre-game plan says the XSP strikes are, how do you know what SPX strikes? RJ, you are correct. I'm more so, when I say fill quick, I'm more so talking about the actual odds on the options themselves. So if there's an XSP entry and you see it right there, this one, for example, 632, 633. How do you know which SPX ones to take? Well, the easiest way to do it is just add a zero. If you add a zero, 632 zero call, sell the 633 zero call on SPX. Your fill and profit target will be about 10 times that number because it's 10 times the size. So 480 fill, 7.2 profit target. However, if you look at the SPX options chain, again, you will notice it does not, well, it has better than $10 strike differences. It has $5 strikes. So like XSP goes 629, 630, 631, 632. SPX has a strike in between those, which allows you to be just a little bit more nimble. That means we can tighten up our strikes if you want to. So instead of adding a zero to the strikes, you can just use the same wrap order principles with the $5 strike. And we'll do a little bit of visuals here and some practice for you guys as well, so you can see, if I were to get hit by a bus tomorrow, how do you pick the right strikes? Well, let's take a look. So here's SPX. It's at 6,320, 6,322 and a half. We want to wrap it. We want to buy the 6,320 and sell the 6,325. Again, it's our burrito. We're wrapping it. On XSP, it would be all the way up here. So since we're using SPX here, we can tighten it up. Gives us just better odds, generally speaking. So again, let's say we're entered for a 250 net debit because we want to enter for around half the price or half the difference of the strikes. And guys, tell me if I need to slow down here. Again, this is recorded. But let's say we enter for 250. Still same process, 50% profit target. So we take our entry fill price and multiply it by 1.5. So our profit target here theoretically would be 3.75. And again, the benefit is a 5-to-1 contract ratio. So where I would normally need to buy 5 contracts of XSP to invest $250, here I just need to do 1 contract of SPX. This is old. I need to take this out because now I give you both SPX. Again, the game plan is just XSP, but when the entry signals come out, I give you SPX as well. Now, how do you pick these? How do I pick these? How can you do them on your own? Again, I want you guys to learn. It's been an awesome strategy. The most fun I've been having in over a decade of trading. Probably the most consistent money I've been making in over a decade of trading without any real massive drawdowns. So if I got hit by a bust tomorrow, I don't want you guys to lose the strategy. I still want you to be able to trade it and hopefully make money on it. So let's walk through a couple practice session, or examples here on how to pick the SPX option. So here we have a bullish entry. Everyone can see that. The price here on SPX is 6,281. For practice sake, we're going to wrap the price here. What strike are we buying? And Brandon's got it there. We're buying the 6,280. So we're going to wrap the current price. We get $5 strikes here. Buy the 6,280. And then we're going to sell the one that wraps it, 6,285. So now we've got our wrap order set. Here was the price I got filled at. I got filled at $2.70. Again, that's always a debit. If it shows as a credit, you probably did it backwards, so make sure it's a debit. So then, now what we're going to do is set our profit target. Entry price times 1.5 gives us 405. So we set the profit target. That's exactly what I did here. Ended up hitting. It was a great day. Love it. All right, let's do another one. For funsies. Price, ignore these red ones. I couldn't hide it because it was in the way of my beautiful chart here. But at the candle close, the price was 6,257 saying buy calls. So again, we're going to go over here, and this is not a very pretty screenshot. I should have showed it to you in 5s, but we're going to buy the one the strike just below this number and sell the one just above. So in this case on SPX, we'd buy the 6,255 and sell the 6,260. So yes, you guys got it right there in the chat. Or Mike, you did. First one in there. So we're just wrapping the current price of the stock with these 2 strikes. Entered for 235 net debit. Profit target, take that by 1.5. Now, something interesting here is we have to round up to the nearest 5-cent decimal. That's just how SPX trades. So you can't trade it for, there's no 353. It has to be 355. So do that there. Set the profit target. Bam, we're done. Let it do its work. Any quick questions there? And again, you don't have to know all of this. I do it all for you. I just want you guys to have the ability to learn it if you want to. I had another note, and I can't remember what it was, but let's look at it on the put side. So if we're going to trade SPX with puts, same thing. So we had a breakdown price here of 6,278. We're going to buy the higher one, sell the lower one, and we're going to wrap that up. Buy the 6,280. Mike, you are so fast. You're front running me. I love it. Buying the 6,280, selling the 6,275. We've got a lovely looking burrito here, ready to eat some lunch. Wrap the price. We entered for 265 net debit. Profit target. Take that number times 1.5. And again, we have to round up to the nearest 5 cent decimal, $4. Set our limit price for the fill or for the auto target, and we are done. Again, I do this all in the Telegram for you, but someone posted in here, knowledge is gold, and I agree. All right, let me answer some questions. I got some questions in here. How do you pick the limit when it keeps moving? So, like Oscar, maybe you're talking about today, for example. This was my experience today. Set a limit price at 265. It didn't fill for about 10 seconds. So I bumped it up to 275. Took 15 seconds, didn't fill. Bumped up to 290, finally filled. Oscar, there's no real perfect answer to your question. I give it about 10, 15 seconds, maybe 30 seconds to fill. And if it doesn't fill, then I bump my entry price up. About 9 times out of 10, it should fill pretty quick. But there are instances. Today was another, a prime example of this where I had to kind of, I hate to use the word chase, but I just had to increase my price to finally get filled. And it took a little bit longer than normal. Ideally, you don't want to chase it and go crazy. Rock O'Neill, if my cost is higher than your fill, I stay with your profit target. I don't want to go for the extra. That's fine. You absolutely can do that. TOS charges me $1.74 per SPX contract. Is that a reasonable price? That means you're paying 60 something cents for options fees. Oh no, is that 30 cents? I don't know, Steve. I'd have to see the breakdown. I assume that means because you're doing the spread. Let me just tell you what they charge me per contract. But I do think that's pretty reasonable. And I did not even realize that they had those additional fees baked in there. I get charged on XSP. Seems a little bit cheaper. I get charged 132 per contract on XSP. And I get charged. All right, whatever you're doing to get $1.74 is good. On SPX, I'm not sure what you guys get charged. I'm showing that I get charged $2.44. Which that is annoying. That's a lot. All right, let me answer some questions here. How are you able to select the XSP strikes at 15-minute mark but need to wait? Because Lynn, if I were to give you SPX prices at $10 width, it'd be easier. But like for example, today we let me just send a message. I'm getting tons of calls right now. Hey guys, in a master class. All right. XSP, let me go there. And today we went a little bit out of the money just because the options prices, but we have a pretty good width here of what each strikes would be with XS or with SPX because they're $5 strikes. I just want to wait to see what that price is so I can get very specific with the wrap we'd be using. Versus if I send it to you here, it might not actually make sense up here because it's just it moves a little bit more, not the actual ticker, but it moves through the different strikes faster because there's twice as many strikes. I don't know if that made sense or if I just made a jumble of words there, but. All right, Mark, when 5 point spread, it seems that calculated 1.5 does not give you 50% gain. I'm not sure exactly what you mean by that. Like in this example, it would not be exactly 50% because you have to round up. Awesome. Knowledge is gold, but being spoon-fed while learning is platinum. Awesome. Hopefully that made sense on the SPX, guys. Put debit spread is for bear. Yes, Karen. Eugene, what if we sell a credit spread opposite side along with debit spread? Could it increase win rate in case the direction is changed. Eugene, I can test it. We tested all sorts of things. I'm a big debit spread guy, but I will test that on selling the opposite side credit spread and see what happens. Yes, RJ, that's another 10% or so. You're saying if you held it for a bigger profit. So I've got 22 new messages here, trying to keep up. How many calls? No, I don't have those stats. Steve, 114 plus 60. Yeah, you might have a little bit better fees than me, Steve. How do you know the price to wrap when price is moving? Katie, I do the best I can. So like we take the price at the close, wrap it from there, and then when it's moving really fast, sometimes we have to jump out a strike to get so we're not paying a ton for fills. Because I'd really like on a $5 strike, if I get filled for $3 or higher, it's really pushing it because then I have to set my profit at $4.50, which is just going to take a lot of time for that to happen. All right. Sorry, I've got so many messages. I apologize. How much would win rate and profit change if you use 1.6 instead of 1.5? Dave, we tested that in one of the master classes. I can't remember which one, but 1.5 was just the best. And there was kind of it can get weird, Dave. Like when you back test, it can get to a point of curve fitting because there was like one where like 1.7 was better than 1.6, but 1.5 was better than 1.6. So I just like the 50% target. I've been using that. It's been making good money for me. Feel free to adjust it however you see fit. Man, no, I will keep it debit spreads for you guys. Mark, looks like 43% gain today, closing at your higher than my calculated 1.5. I'm not exactly sure what you mean, but for me, um, uh, are you saying you filled for a bigger price than me? Higher price than me? All right. We are not doing credit spreads. Sorry, we're getting a lot of questions about credit spreads now. Mark, 1.65 gives you better long term, but 1.5 is more likely to get filled more often, which means higher win rate. Yes, exactly. The For today, I got filled at 285, profit target at 430. That's 50.8%. I'm wrapping the close price is the best way to do it because sometimes it'll be like way down here. And you wouldn't want to wrap this low price. You would want to wrap the current price. All right, we'll keep on moving here. Let's talk about why this style of trade works so darn good with the options that we use. Keep in mind that these drawings that I'm going to show you here, they're my own. I drew them from chicken scratch. They're not exact options math, but it's generally visually how it works. It'll give you a good conceptual idea of why our trade is awesome versus the way a lot of people trade. So, if you're trading basic call options, I'm sorry, I'm gonna have to dog on you here, but I'm not. That's not intended to beat you up here. But this is just some market math. Let's talk about the market math. Basic call options need price to move faster or to price to move more to hit their target. So because of the way time decay works. Imagine this is your zone to hit a 50% target. If you have a call option, if it makes a decent move fast, you'll hit your target. But as time goes on, as time goes on, apologize for that, um, you'll need a bigger move. So when you have the full day of time premium available and it happens quick, you'll hit your target. But if it hasn't made a big move and now you've only got an hour left in the day, you need a much bigger move on the S&P to hit your target. That's because as time decay works against you, it demands bigger moves. So as more time passes, the harder it's going to be for you to hit your target. But by using the debit spread, we essentially flip that curve the other way because we are selling the further out of the money call, meaning we are collecting time decay on it and offsetting our time decay. So instead of demanding a bigger move as the day goes on, as the day progresses, we actually need a smaller move. So for us, you may have noticed, to hit our profit target right away, we would need the markets to move really fast. However, as the day goes on, and even if stocks just grind, as time passes, our level that we need to hit decreases, meaning our odds increase, our odds improve as the day goes on. That's because as time passes, the option that we sold is decaying in value, and we need smaller moves to hit. Does everyone understand this really quick? Or before I keep going. John, this debit spread triangle is key for me to stay patient. Yeah. And a lot of times we've had days where it's just really boring and grindy, but we know, we can be confident like, hey, we're still in a good spot to hit because we know this is happening in the background working out for us. So let's look at some examples here. And again, this is not the exact number, but this is a general idea of what's going on in the options market. July 21st, we get a big move out of the gate. We hit in the morning. Does not matter what happens the rest of the day. We're done. July 3rd, we got a big move out of the gate, but not quite big enough to hit right away. You can see it stall out here. But as time passes, the number we need to hit comes down, comes closer towards us. This is a good thing. The lower this is, the easier it is for us to hit. And eventually, right around 11:30, we crossed into that zone and bam, we were done. That's why we have a huge advantage, because even when the opening candle continuation is slower than normal, we still get a great shot to win. So July 11th here, for example, buy calls, nice start. Uh-oh, not so good. We did not see that opening candle continuation. We just see chop, chop, chop. However, as time passes, our options demand less and less of a move. So eventually we hit. And even if it was like this view, still, no move at all. And you still get a chance to hit because that decaying curve is now working for us. July 1st, another example, real slow. This came about 2 p.m. Look at this. Opening candle. Oh, no, it did not work out. Probably some news. Just looking at the candle size here. Kind of like today. Probably some bad news. Then we just chopped and grinded. But as time passed, we needed less and less of a move to hit. That eventually happened. So this can give us an awesome advantage with the breakout trade that I don't think we can get by trading any other style of option. Mark, can the green triangle be calculated for each trade? Yes, it can. I do not know how to overlay it. Let me actually just look. Some of the brokerages do a great job creating it. I don't know if Robinhood will show a decay model. Let me just try something real quick. They won't show it in real time. They'll just show you the curve. But it can be calculated. I cannot do it in enough time, quick enough to get it to you guys. But it's actually curved. So it's not exactly like this, but this is the general look of it. And the same thing to the downside. So if we're trading puts and you're just buying basic puts, well, if you still have a lot of time left in the day, you can get a smaller move to hit. But as time passes, it demands a bigger move. That's not good. So as time passes, your opportunity is eaten up by time decay. So you're going to need a bigger move to hit. And that's why you can have days like this where the S&P worked in your advantage And it kept going lower as the day kept going, but you never hit your profit target because time decay was completely hosing you. But with the way we're trading, we are flipping that curve on its head. Whereas as time goes on, we need less and less of a move. Our odds get better and better. So let's look at some more for fun. July 15th, buy puts. First move down, we almost hit here in the morning, got really close, didn't quite get there. That's okay, because as time moved on, we needed less and less of a move to hit. And you can actually see here, we got a little bit lower here at 10:30 than we were at noon, but we ended up hitting our profit target at noon, even with less of a move, because the decay that's going on. July 18th, same thing, big move down. This case, we hit right there in the morning. But if we didn't, again, as time passed on, pretty much the rest of the day was in the green for us. Even if it was like this, even let me make this like real extreme. Like check this out. This is a big move. So this is obviously not how we'd be trading, but you can see as time goes on, we have multiple chances to hit, even with the markets going higher from noon through the end of the day. So it's really awesome. Really sweet. Oh, this is fun too. While we're nerding out, let's talk about our odds here. Right now, we're hitting with around 86% win rate. I think it's 85% right now. You get the gist. However, we don't need to be even close to that profitable or that win rate to be making some good money. With the odds we have, with the 50% auto target and no stop loss, we technically need to hit every 2 out of 3 trades to break even. So we need to win 67% of the time or better to start making money. So let's say someone starts out with $1,000 to invest and we only win 70% of the time. So right now we're winning 85% of the time. Let's say we performance really lags, not nearly as good, and we only win 70% of the time. Well, after 200 trades, and this is not compounding, just staying consistent with $1,000 with a 70% win rate, you still make 10 grand at the end of the year. So the win rate could get absolutely smoked from where we're hitting, and you still make good money. What if it's a 75% win rate? So the win rate falls by 10%. If you hit only 75% of your trades with $1,000, no compounding, you make 25 grand at the end of the year. This is crazy to me that our win rate could take a 10% hit from here and you're still making a really awesome chunk of change. Keep in mind, that's $1,000. I'm starting with 5 grand. If I win only 75% of the time over the next year, I'm going to make $125,000, give or take. Obviously, there's fees too. We brought that up today, so there are fees, but it's not 100 grand of fees. So again, even if my win rate gets way worse than what we've seen from the testing, what we've seen from the live trading, I can still be very confident in this trade. What if we fall to an 80% win rate? $1,000, no compounding, pays out 40 grand at the end of the year. To me, this is crazy. 82.5% win rate, 47 grand, 85% win rate, 55 grand. And then how are we currently looking? Well, I put this actually in the trade tracker for you guys. So obviously you can see the full stats and everything. Annual pace, this just give you based on the win rate and the 50% target, 100% loser calculation based on $1,000 starting out. Right now, based on our current trade tracker, you can pick this up tomorrow, and based on our current hit rate, we're pacing $58,000 in profit at the end of the year, just starting with $1,000, no compounding, nothing like that. This is pretty remarkable stuff to me. I hope you guys feel the same way. I love this strategy. It's why I put 5 grand in a day. I hope it works forever. I don't see why it would not. I really think we finally struck gold here with this one. So I'm very excited. So again, I added that to the trade tracker so you can see at any given time. It does update automatically. So like as the win rate improves, or if the win rate goes up, this number will go up. If the win rate goes down, this will adjust automatically. So you can always get an idea of what our annual pace looks like in the members portal. Now, of course, these sessions are recorded for you to review in the members portal. But first, before we wrap up today, we've gone exactly an hour. We've got 1 minute left. Let's ask some questions, or let me answer some questions here in the chat, and I'm going to post this again for you guys. If you guys want to, there's no pressure, but I'm in this for a lifetime. I'm going to be doing this for a long time. I highly recommend, if you want to save, if you're enjoying it so far and you want to save money down the road on subscription fees, on the annual renewal, just upgrade to lifetime. You can do that now. Save yourself down the road. Again, no pressure. I'm not going to twist your arm. You also get the unfiltered indicator, which we'll cover on Friday. That link is there in the chat. Graham, is the trade tracker available to download? I am not sure exactly how you could download it. Let me look in the members portal if I can download it. It looks like, well, no, it saves it as a web page. I was going to say I can right click and save as. I don't see it as available to download, but Deanna, do you know if there's a way to make that available to download? We can try it out. I know the opening playbook members portal, that $1 members portal, we should have a blank tracker in there if you guys want a blank tracker. On call days, what about using bull put credit spreads? You can absolutely do that. Stacy, thanks for the strategy. I love it too. Me too. All right, let me keep reading these questions. RJ, 3 losers since July 23rd kept you at break even until recently. Yes. Yeah, we got, like I said at the beginning, I opened this up to the all access members. I think it was on the 14th. So I wish we launched it that week. We ended up launching on this week. So we started off with the first week was not as amazing. I would have loved to win all 5 that week. Ended up actually down after the first week, but now you can see heating up again. So depending on where you start, for the folks that started this week, you're off to a great start, 3 for 3. But over the long haul, you can just see how consistent this has been. But not every, I mean, to your point, RJ, like if you started on this day, you might be pretty, like, you wouldn't be so confident in the strategy at the end of this run right here. Win or lose 1, win 2, lose 1, win 3, lose 1, win, lose. You might be thinking this is terrible. If you gave up then, though, this is what came next, 17 in a row. So again, I try to be very clear about this. There's going to be winners. There's going to be losers. I think we all know that. There's also going to be times or weeks where it's really hot. Like the week going into launch, I made $5,000 that week. Personally, we won all 5 of those trades. And then there's going to be weeks where it doesn't win every single one. But over time, you can see the stats over time, how it's looking, the annual pace, all that good jazz. Again, I'm doing $5,000 a day right now. And I just looked before this class. Since I started sharing this with the public, if I started at $5,000, which I didn't, I started at 500 a day. Then I went to 1,000. Then I went to 2,000, so on and so forth. But it's up 30 grand. And that includes some of these stretches, 2 losers in a row, 2 losers in a row. And this one I actually won, but about half the people didn't hit, so I marked it as a loser. But still, even with all those things considered, it's absolutely on fire. I love it. Market dashboard. I will cover that on Friday. Oh my goodness, Vladdy, here's a nice stat. 17-1 on Fridays since February. That's awesome. Holy moly. RV. What is where did you pull that from, RV? The stats there. Is that your own personal stats? Vladdy, you can copy and paste into Excel, yes. If you already got the unfiltered ink, you probably got lifetime too. Oh, here's my results on 90 completed trades. Holy moly, RV, was that with this strategy? 93% win rate. That loss 730 on Fed day, yeah. If you exited early, you probably broke even or made 5-10%. I held it through. Jerome hosed us. But again, the strategy, I stick to the rules. It's very easy to get my emotions tied in. When we did the testing for this, the live trading, we said, let's ignore everything and let's just take it each day as it is. And let's not pretend like, oh man, they had a news report today, so we should pass on that. Nope, take each and every day. Sometimes it doesn't work out. I did look back at the other Fed days and it was like 4 for 4 this year on Fed Day. So it just didn't work out for us there. Ideally, though, we would hit before the Fed speaks. That would be perfect, but either way. I've used a lot of different strategies. 60 minutes, my most profitable in for life. Awesome. No problem, guys. How many contracts is $5,000? If we're entering, typically because the price is 250 a contract, it's 20 contracts. If you were to, that's based on SPX, about 20 contracts. If you widen those strikes, obviously it'd be 10 contracts, so on and so forth. Mark up 3K, earn 1,300, not 50%. Please calculate earnings after trade is over.